The world of cryptocurrencies is currently in a state of disarray. After the virtual currencies experienced a dizzying rally in 2021, cryptocurrency companies began heavily advertising during the Super Bowl just a few short months ago. Companies like Coinbase, which operates the largest cryptocurrency exchange in the United States, are announcing layoffs today as the price of Bitcoin and other cryptocurrencies continues to fall. The crypto house is on fire, and everyone is just rushing to the exits because there is a complete loss of confidence in the space, says Ed Moya, a senior market strategist at the financial firm Under. Everyone is just rushing to the exits because there is a complete loss of confidence in the space. The following is what is taking place. Why are cryptocurrency prices dropping so drastically? Due to the fact that they are being impacted by the same factors that are having an effect on stocks and other assets. The Federal Reserve is increasing interest rates at a rapid pace in order to bring down inflation, which is rising at the fastest annual pace in over 4 decades. Consumer prices are also rising at the fastest annual pace in over 4 decades. The Federal Reserve increased interest rates by 3/4 of a percentage point on Thursday and indicated that it could raise them again by the same amount at its next meeting in July if it was necessary to bring prices down. If you are enjoying this video so far, please like the video and subscribe to the channel so you won't miss another video. A rise in interest rates makes it more expensive for individuals and businesses to borrow money, which is adding to growing concerns about the possibility of an economic slowdown. The broad S&P 500 index entered a bear market this week after experiencing a precipitous decline from the record highs reached in the stock market in January. There has been little to no protection afforded to cryptocurrencies. Since Bitcoin reached an all-time high in the month of November, the value of the most popular digital currency in the world has decreased by approximately 70%, and its competitors are also experiencing a decline in value. Both Ether and Dogecoin have experienced a decline of approximately 70% so far this year. The proponents of the digital currency Bitcoin have maintained throughout its existence that it would serve as an inflation hedge, despite the fact that it has not acted in this manner. The value of Bitcoin has decreased in tandem with the share prices of technology companies. What this episode, this crash in crypto prices, shows is that cryptocurrencies are by and large speculative financial assets that are subject to macroeconomic forces, such as changes in interest rates, says Eswar Prasad, an economics professor at Cornell University. So, what does this imply for businesses dealing in cryptocurrencies? The precipitous declines in the value of cryptocurrencies are putting some businesses in a difficult position. Because it is experiencing financial difficulties, the cryptocurrency exchange Celsius, which accepts deposits of cryptocurrencies from individuals and then lends them out, has temporarily halted withdrawals. On Monday, the cryptocurrency exchange known as Binance put a temporary hold on Bitcoin withdrawals for several hours. Just a few weeks after the failure of a stablecoin known as Terra USD, the problems that have been occurring at Celsius are eroding people's confidence in the cryptocurrency industry as a whole. In response, cryptocurrency companies are rethinking their strategies for the foreseeable future. The number of employees at cryptocurrency exchange platform Coinbase was cut by almost 20%. The chief executive officer of Coinbase stated in an internal memo that the company grew too quickly. According to what Brian Armstrong wrote, it would appear that we are entering a recession. There are still those who support cryptocurrencies who are under the impression that a crypto winter could be followed by a crypto spring. In the past, severe recessions have been followed by robust recoveries. However, according to Moya, an analyst at Under, the current economic climate has changed, and as a result, the outlook for cryptocurrencies has also shifted. Because the Federal Reserve is going to keep hiking interest rates aggressively, and because inflation is still quite high, it is likely that all markets, including cryptocurrency markets, are going to continue to experience a lot of pain in the near future. What does this mean for people who have already invested in cryptocurrencies? Millions of people who bought cryptocurrencies have been given a rude awakening as a result, especially if they got involved in the craze in the previous year. According to Prasad, the year 2021 marked the pinnacle of cryptomania. The aggregate value of all digital currencies in circulation across the globe recently reached a staggering $3 trillion. Companies dealing in cryptocurrencies have entered into sponsorship agreements with professional sports teams. Coinbase, Crypto.com, eToro, and FTX have each spent millions of dollars to purchase advertisements during the Super Bowl. Matt Damon, an actor, was hired on as a spokesperson for Crypto.com, and the grumpy comedian Larry David was featured in an advertisement for FTX. The message that customers receive from these companies was that cryptocurrency is the future of finance and that they should not miss out on the opportunity. The technological razzle-dazzle of cryptocurrency swept in a lot of retail investors who didn't realize the sort of risks they were taking on, Prasad says. It swept in a lot of retail investors who didn't realize the sort of risks they were taking on. The total value of the cryptocurrency market has been reduced to approximately $1 trillion as of today. And if you purchased Bitcoin on February 14, the day after the advertising bonanza that was the Super Bowl, the amount that you paid for it is now worth approximately half of what you paid for it. What repercussions will this have for the rules governing the sector? Regulators are becoming increasingly concerned as a result of the rise in the number of amateur investors and the increasing complexity of certain cryptocurrency products. There is a lack of clarity even regarding the most fundamental aspects, such as who is in charge of supervising the cryptocurrency market space, because crypto markets are still relatively new. At the moment, the Securities and Exchange Commission, SEC, and the Commodity Futures Trading Commission, CFTC, both assert that they have regulatory authority over certain aspects of the cryptocurrency market. According to Cam Harvey, a professor of finance at Duke University, if there is no guidance whatsoever, people will be taken advantage of, and that is something that we want to prevent. As of right now, we don't really have anything. The Securities and Exchange Commission is ramping up its enforcement actions against cryptocurrency companies while also considering new regulations. In the meantime, President Biden issued an executive order in which he requested policy recommendations from various government agencies. And in the United States Senate, Senator Cynthia Lummis, a Republican of Wyoming, and Senator Kirsten Gillibrand, a Democrat of New York, are working together on the first comprehensive crypto legislation. The bill would provide the Commodity Futures Trading Commission with more regulatory authority than they currently have. However, for the time being, many analysts do not believe that the wider financial system is in danger. The total value of the cryptocurrency market is still significantly lower than the total value of the market for a major corporation such as Apple. But this most recent slump has caused some